Hey guys, what is happening and welcome to this video. So this video could not be more important if you have any money in Canadian financial institutions. We are going to be going through my analysis of the big banks here in Canada, who's the most exposed, who's the least exposed, as we inch closer to a banking crisis. So this video is not to be missed, so please smash that like button for me. And if you want to see more content like this about macroeconomics and the economic environment that we're in, then please subscribe to the channel below and make sure all notifications are turned on so you get notified when we go live. So without further ado guys, let's get into this. Let's do this! Alright guys, welcome back. So before we get into this, I just want to make a disclosure. This is not financial advice. Do not go and eject all your money from the bank after you hear this video. This video is to be taken at your own personal discretion, and this is my personal analysis. This isn't an analysis of a great big Wall Street bank. Some people may view data differently to the way I view data, so that's always worth noting here. And full disclosure, I just want to let you know I am short on most of these financial institutions. The reason I'm disclosing this is because many people here on YouTube, they like to pump up stocks, they like to trash different things, but they don't disclose whether they're long or short on any particular stock. So obviously I am disclosing, full disclosure, I'm short on a lot of these different banks. Now I'm obviously short for a reason, one of which is my analysis of their balance sheets and earnings reports, which we're going to go into right now. Number one, worst financial institution, which is miles behind everybody else in terms of their leverage, is First National. Now this bank's stock has been getting pummeled since last year, and it's no wonder, because when you start to look over their balance sheet, you begin to notice that there are many red flags everywhere. And their leverage ratio is just out the window completely, and they have the worst Altman Z rating out of all the financial institutions in Canada, and all the financial institutions in Canada are in the distress zone according to the Altman Z index. Behind them is the Equitable Bank. The Equitable Bank is another kind of less well-known, let's say third tier bank here in Canada, but nevertheless they do a lot of lending of mortgages, just like First National Bank. And also their stock has been struggling as of late. And it's kind of interesting when you go through their balance sheet, you notice that there is many different red flags. They are negative cash flow, so they actually don't have cash to cover all their positions that they have on right now. They're actually negative. The leverage that they're using is quite insane, but it's not insane to the level of First National. Now, interestingly enough, a Canadian darling bank, Canadian Imperial Bank, also known as CIBC, scores in at number 3. I was actually initially shocked by this because I thought it would be National Bank that was at number 3, but it's actually CIBC, which is a huge bank here in Canada. But CIBC is very exposed. Again, over leveraged in the Altman Z zone of distress. There's many different metrics, and I would encourage you, if you have money in any of these financial institutions, to go and do your own research. The balance sheets, the quarterly earnings reports, they're all online. Yes, it's no fun task reading through and diving through the data, but it's worth doing. And always have an insurance policy on your money. And this isn't financial advice, but my insurance policy is gold, and that's physical gold, not GLD or gold mining stocks. Number 4 after CIBC is National Bank. Now, National Bank is not doing too great either. Again, negative cash flow and over leveraged in the Altman Z distress zone, but not as bad as CIBC and Equitable Bank. And then First National Bank is just so far away. I mean, it's literally like a sinking ship. First National Bank could be the first bank that gets into serious trouble over the course of this year. After National Bank is Bank of Nova Scotia. Bank of Nova Scotia, again, over leveraged. Altman Z is in distress. All the banks are in distress in the Altman Z index in the distress zone. And their leverage ratio, again, is just not good. When you go through their balance sheet and when you go through their income statements, you start to notice there's just huge movements in capital around their balance sheet. So they're shifting numbers around. That's always a bad sign when they're trying to do that. It's always usually trying to cover something up, which no doubt they are. Then there's Bank of Montreal, number 6. And they are significantly negative on cash flow. However, leverage is slightly better than the rest of them. And they're in the distress zone as well, like all these banks. The 2 banks that performed the best were Royal Bank, number 7, and TD Bank, number 8. So TD Bank is the safest place, in my opinion, and that is in my opinion, this isn't financial advice, to have your money. With Royal Bank coming slightly behind there. So these financial institutions, they're all in distress zone. They're all over leveraged. They're all doing lots of magic on their balance sheets to move numbers around. But there are significant risks with First National Bank and Equitable Bank. And that is being shown right now and has been shown over the past 6 to 8 months in terms of their stock prices. Now, a lot of people who don't have a clue what is going on are going to be buying bank stocks. They're going to think that interest rates going up are bullish for banks when that is not the case. You see, when you go through the earnings reports, which retail investors don't, you notice that the majority of Royal Bank, for example, nearly all of the money they make is from loans. It's around 80-90%. And of that, 70% is mortgages. So the housing market is starting to slow down, and that's going to continue as interest rates rise. And that's also going to put more pressure on prices coming down. The probability of prices going down becomes higher than going up. That's already happened. So price pressure is starting to increase. You're going to see velocity decrease, and it doesn't really matter if prices fall that much. It's the velocity decreasing that is going to affect these banks' cash flow. And if you're over leveraged, you can easily get triggered into a margin call. And that's exactly what happened with Lehman Brothers. And it wasn't because Lehman Brothers didn't have the assets to trade for collateral or anything like that or fulfill those margin calls. They had a lot of assets, but people weren't sure how to value those assets, and the valuation of those assets at that time was kind of an unknown, kind of up in the air, like a lot of the valuations of the assets for these Canadian banks, especially if housing prices are in decline, because a lot of their assets are properties, because they own all these properties through the people who bought them, thinking they own them when actually the bank owns them. They're the asset for the bank, and the liability is the loan, of course. So anyway, guys, I hope this video was kind of helpful, gave you some insight. It's just my analysis at the end of the day. And at the end of the day, I'm short on these Canadian banks. Now, a lot of people are going to be like, oh, you're short in the Canadian banks, you're going to lose. And to be honest, that's totally fine. Like, obviously, I took this trade knowing full well that I could lose. And actually, I think I have more chance of losing than winning this trade. And to be totally honest with you, the reason I took this trade is just because of risk to reward. Risk to reward was skewed so highly in my favor, it really didn't matter. And at that point, I just said, you know what? I'm going to make this trade because I got in at a good place on a pullback, which is what I always like to do. And I was like, I've got to take this trade because the risk to reward is absolutely massive and I know what's going on behind the scenes. Does that necessarily mean I'm going to win that trade though? Absolutely not. I may lose it and it may go completely the wrong way. But at the end of the day, guys, that's just trading. And that's what retail investors don't seem to get about trading, and that's why they always lose money. I'm in the business of making trades that have a low risk, high reward profile, and that is really the trades that I like to be on board with. So anyway, guys, I'm gonna keep you updated on the trade. If you want to follow the trade, then you can follow me on Twitter because I'll be posting updates about the trade there, and all my averages are on there. I've posted it. It's all on there, full disclosure. So you can follow me on Twitter at MarketManiaCA. And anyway, guys, thank you so much for watching. I will see you in the next video. As always, take care of yourselves. Peace and love, guys. Bye-bye.